Welcome. I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team, the team that oversees all of Wespath's investment funds. Today, I'm pleased to be with you to talk about how the markets performed in the first quarter and what drove that performance. As has been the case in many of my quarterly recaps, inflation remains the big story. Many of you have likely experienced a little sticker shock at the gas pump recently. The cost of gasoline rose 3.8% from January to February. Due largely to the cost of gasoline and shelter, the Consumer Price Index measure of inflation rose 0.4% from January to February, which is the most recent reporting period. Over the last 12 months, the Consumer Price Index, or CPI, rose 3.2%. The last time the CPI increase was below 3% was March of 2021. With inflation still over 3%, expectations for the U.S. Federal Reserve have shifted. At the start of the year, the Fed was expected to make 7 interest rate cuts in 2024. By the end of March, it was down to 3 expected cuts for this year. Despite the change in rate cut expectations, U.S. stocks have continued to climb higher, led by growth and technology names. The S&P 500 returned 10.6% in the first quarter, touching a new high at the end of March. The tech-heavy NASDAQ also set new highs during the quarter and posted a gain of over 9%. International stocks, represented by the MSCI ACWI ex-US IMI index, were up 4.3%. With returns in equity markets now somewhat detached from interest rate expectations, investors are paying greater attention to corporate earnings or profits. Earnings are expected to rise in 2024, and if the current rally is to be derailed, it would likely be due to a miss in corporate earnings. I also wanted to share an update on the Magnificent Seven, or Mag 7 for short. We heard so much about these 7 U.S. stocks in 2023 because they played an outsized role in driving the markets higher. Many of the 7 companies are household names like Microsoft, Amazon, and Facebook's parent company Meta. The Magnificent Seven had another great quarter to start 2024. Together, they jumped up 17%. However, that doesn't tell the full story. It might be a bit misleading to continue to lump all 7 of the companies together. NVIDIA, a leading supplier of artificial intelligence hardware and software, continues to benefit from the excitement surrounding AI. It reported better than anticipated quarterly results for revenue and net income. The AI chipmaker was up 82% in the quarter and gained 225% in the past year. Tesla has recently been the weakest member of the Mag 7. Its shares were down 29% for the quarter and have fallen more than 50% from their 2021 highs. Apple is another Mag 7 company that might be losing a little bit of its shine. Its shares were down about 7% in the first quarter. As previously noted, international stocks were positive in the first quarter. However, just like with the Mag 7, the big picture number doesn't tell the full story. Within developed international markets, economic growth remains weak. Japan, the UK, Finland, and Ireland are all experiencing recessions. Within emerging markets, India remains the darling, up over 40% in the past year. It is clearly continuing to benefit from negative investor sentiment toward China. Over the past year, India has outperformed the S&P 500. With all this talk about strong stock performance, you may be wondering if you should be invested more in stocks. Some people have even suggested people saving for retirement should invest 100% of their financial assets in stocks. In a recent blog post, I explored that very topic and explained why it's important to consider risk, not just returns. There's a link to the blog in the description below. I invite you to check it out. As always, Wespath will continue to monitor stocks, bonds, and much more. and update you on the most important developments. We are here to keep you informed and help you achieve your long-term goals.